Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at AMD's earnings for Q3 of 2019. Like always, we have my buddies Bull Solo and Darth Bear ready to keep track to see how the company's doing. So let's get started. To start off, all the information I collected comes from AMD's investors website and also seekingalpha.com. Alright, next let's take a look at the stock price review. Right now, AMD is sitting at about $33. In the past 5 days, it's up 5.6%. In the past month, it's up 17%. In the past 3 months, it's up 8.8%. Year to date, it's up 79.47%. In the past year, it's up 81.93%. Revenue. First thing, let's talk about revenue. Q3 non-GAAP earnings per share was 18 cents, and it meet expectation. There was no miss, there was no gain, and meet expectation. Revenue was 1.8 billion, and it missed revenue by $8 million. That's definitely not a lot of by it missed. It's probably like not even 0.1% of total miss. So that's pretty much flatline. Revenue of remember how I said revenue of 1.8 billion is up 9.1% year to year. So these are really good numbers. They met expectations, they met revenue, and revenue is up year to year. So the first point I'm gonna have to give to Bull Solo. Next, let's take a look at comparable sales. So like I mentioned, total revenue is up 9% year to year. Computing and graphics. So AMD has two major revenue collections. The first is computing and graphics, and that makes up 71% of the total revenue, with 1.2 billion, almost 1.3 billion of the total 1.8 billion. That is up 36% year to year. Then we have enterprise, embedded, and semi-customs, which is about the rest of 29% of revenue, sitting at about 525 million, and that's down 27% year over year. But because the higher percentage of the revenue breakdown is up 36% of the year, we're still seeing a bigger increase in total net revenue. And yes, we're seeing that enterprise, embedded, and semi-custom is down 27% year over year. But we have to remember that in the semi-custom, I'm going to explain what these two have. But the semi-custom includes video game chips in there, video game console chips. And at the moment, since the new generation video game consoles have come out, the revenue from there is pretty much slowed down until they start ramping up for production, and they haven't done that yet. So obviously right now, for example, PlayStation 4 and Xbox One, there's not really much a demand for it, since people are just going to wait a year from now for the next console. So there's not a huge demand on there, so obviously sales from theirs have gone down, and that's what we're seeing, that 27% year to year. So like here, we're going to talk computing and graphics. So first, computing and graphics is the one that was about 71% of revenue. For those that don't know, computing graphics is majorly made up out of two items: the Ryzen processors and their Radeon GPU products. So net revenue for the past 3 months has increased by 36% compared to the same time last year. This increase was primarily due to a higher demand of Ryzen processors, but it was offset by a decrease in demand for the Radeon products. So right, we're here seeing that Ryzen items are going up, but Radeon products are not selling as much. The increase in average selling price was driven by higher demand for their Ryzen processors. So again, these Ryzen processors seem to be a huge hit, right? We have a 10% increase in unit shipments compared to the same time last year, and a 40% increase in average selling price. And both of these have to do mainly because of demand of their Ryzen processors. Now let's compare the past 9 months. The past 9 months has decreased by 3% compared to the past 9 months of last year, primarily as a result of lower graphics channel memory sales due to the decline in blockchain related demand, partially offset by a 16% increase in average selling price. So we can see, right, even though net revenue is up for overall for computing and graphics is down 3% in the past 9 months. And the major reason is last year there was that huge demand for all the blockchain related graphics card, and they're seeing that. But I think it's pretty good that it's only a 3% down, because there was a huge demand last year and the year before that. But a 3% down is pretty much almost flatline. Next, we're going to take a look at operating income. Operating income was $179 million for this quarter compared to $100 million the prior quarter, prior time, same year. And the improvement in operating income was primarily driven by higher sales. Awesome. Operating income for the past 9 months compared to the past 9 months of last year, this year was $217 million compared to $355 million the prior year. So that's a huge difference. Even though net revenue is only down by 3%, operating income is down by a huge margin percentage-wise. And they say the decline in operating income was primarily driven by lower sales and higher operating expenses. Okay, next we're going to take a look at the enterprise, embedded, and semi-custom. So just how I broke down the previous one on how revenue is there. Revenue in this section is collected by, again, 2 products. The first main product are the video game chips. So like I mentioned, the chips that go into the PlayStation 4 and that go into the Xbox One. And then they have the awesome EPYC server that they're talking about, the EPYC server processor, which is for the huge data centers, right? So net revenue, like I mentioned, has decreased by 27% compared to the prior quarter, prior year, same quarter. So quarter 3 2019 to quarter 3 2018 is down 27%. And this is primarily as a result of lower semi-custom product revenue. So this is telling us, right, the semi-custom product revenue are the products that go into the video game. So there is a decrease in the video game chips, but it was partially offset by higher sales of their EPYC server processors. So this is pretty good news, right? We have to remember that the EPYC server is increasing sales, so they are having better sales in this, and it's offsetting the lower semi-custom chips. Next year, if they're having a positive higher sales on EPYC servers and they're ramping up the max production for the video game semi-custom, this is going to produce a whole lot of revenue compared to this quarter. So that's definitely good news. Net revenue for the past 9 months compared to the 9 months of prior year is down 19%. And this is down for the similar reasons, right? They have lower semi-custom sales and they're being offset by higher sales of their EPYC server. Operating income was $61 million for the quarter compared to $86 million for the same time last year. And that's because there is a decline in operating income, primarily again due to the lower semi-custom product sales, and it's offset by the higher sales of their EPYC server processor. So right, we can see operating income is down 20 million, about 20 million compared to the same time last year, but we have a decrease of 27% of revenue. So I think that's actually about 25% down. So we can see it matches the net revenues down with the operating income. So operating income for the past 9 months is now sitting at 218 million, where same time last year it was sitting at 169 million. But you're saying, whoa, how is that possible? How is this past 9 months doing better than the past 9 months, even though it has a 19% less revenue? And the improvement comes from a licensing gain of 60 million recognized in the first quarter of 2019. If it wasn't for this, there would be a delta of about $10 million, and it'll be like $10 million less this quarter, these past 9 months compared to the same time last month. And that's actually really good numbers. Even though revenue is down 19% in the past 9 months, operating income would not be down by that much percentage-wise. So obviously for comparable sales, we're seeing good numbers in computing and graphics. We're seeing the good numbers here in total revenue up. And even though we're seeing a low numbers of enterprise and embedded semi-custom, we know that those numbers are going to ramp up in the next year because of the season of the new video game consoles. So I'm going to have to give another point to Bull Solo here. So now I just have a few things to note. These things, I'm not going to give either a point to Bull Solo or a point to Darth Bear. It's just things to help us out, understand how the company is doing. So first, research and development. Research and development for this quarter has increased by 12% compared to the same time last year because they're increasing the development cost in computing graphics segment as well as stock-based compensation expense. And for the past 9 months, it has increased about 8% compared to the same reasons I just explained. And I'm happy that they're increasing their research and development expense, but I would have hoped that they increased it a lot higher than 12%. I wish this company definitely needs to go hard if they want to pull more from the segment. Gross margins this quarter was 43% compared to 40% same time last year. And for the past 9 months, it's at 42% compared to 38% in the past 9 months of 2018. Another thing to note, right now sitting at 43% of gross margins is the highest quarterly gross margin since Q2 of 2012. So we can see this company, and you can see it here in this gross margin trend, this company is definitely turning things around. A few other things to note: they have seen strong demand for their top-end Ryzen processors. They gained client processor unit share for the 8th straight quarter. In commercial, HP Lenovo announced new desktop powered by Ryzen Pro 3000. In November, they're launching the industrial first 16-core mainstream desktop processors and also their 3rd generation Ryzen Threadripper. And they've added multiple cloud and HPC wins, high power computing deals with Microsoft using EPYC CPUs and Radeon Instinct GPUs. They expect semi-custom, like I mentioned, they expect semi-custom demand to further soften in the 4th quarter of this, but will increase now that both Microsoft and Sony have announced new AMD power consoles for holidays of 2020. They also have in cloud, they have Amazon AWS, IBM Cloud, Microsoft Azure, OVH Cloud, Twitter, and Tencent all announced plans to deploy EPYC processors in their data center. So these are some big names that I've mentioned. Okay, so next we're going to look at AMD's future plan. So I think this is one thing they lacked in 2012. They didn't really have an eyesight of where they wanted to go, and that's when things started to go south for them really quick. So I want to make sure that they have a plan set forward, and we can see they do, right? They have a roadmap up to 2022 or late 2021. So here we can see the computer architecture roadmap includes Zen 3. The design has been complete, and they're working on it, and then they're Zen 4 on design in this current design work. In the Radeon graphics roadmap, they're shipping RDNA, and they're working on design for RDNA 2. So we can see that they have a future plan going forward. And now if we're taking a look at the enterprise server chips, we can see that Rome, it definitely started being produced in Q2 of 2019. And now they're working on Milan, which is supposed to be expected to be released in Q3 of 2020. So this company definitely has plenty of things to do in the meantime, and they're definitely continuing to develop. So for that reason, I'm gonna have to give a point to Bolsolo again. Even though I'm not sure if the future plans themselves are going to work, I'm giving them a point because it is important for a company to have a future plans and to have a roadmap of what they're going to do so we can measure the success of what they're doing. Some more things about the future plan is I love hearing the earnings call. I love hearing the earnings call and reading the transcript, especially the Q&A section. One thing is I'm definitely a big fan of Lisa, and I think she's handling the company pretty well. And in one of the questions, there was a representative for Bank of America, but he pretty much asked an important question of why is AMD at the moment focusing on profits? Shouldn't they focus on marking a bigger footprint in the market right now? And that's actually pretty, that makes sense, right? This company, we can see, is definitely trying to maximize its profit. And I do think it's trying to do it to make its shareholders happy. But shouldn't they focus on overall making a bigger footprint? So once they have that big enough footprint, they can collect a lot more revenue and be in a better place than they are now. And Lisa Su responded that she gets this question a lot. But she did mention that even though they are getting profits, they are spending, frankly, a nice amount of money on research and development. And she says, we did spend a little bit more this year than we originally planned. And that was frankly because the opportunities are very strong. And most of the additional spend in target at research and development with the notion of platform investments, software investments, to ensure that we capture the opportunities that we have. I think we have the right balance. And certainly going into 2020, they'll continue to look at the balance. But I think we are very well balanced between top line and bottom line growth. So Lisa is pretty much saying that, hey, we're trying to find the perfect balance, right? We definitely want to go hard in research and development. And we are, right? Because we spent more this year compared to what we originally thought because we saw better opportunities. But at the same time, we have to be smart because, right, if things go south, we need to have the right amount of money. And I think that was a great response that I want to share with you guys. Next, we're going to take a look at shareholder return. Like if you are an AMD holder, you know there is no return going on here. So for that reason, I'm going to have to give a point to Darth Vader on this one. Next, we're going to take a look at this debt. So that used to be such a huge portion of AMD, and it is crazy watching AMD in the past few quarters, how it keeps decreasing, and that's how it's going. So same last quarter that was sitting at 1.2, almost 1.3 billion dollars, and right now it's sitting close to 1.1 billion dollars. So a decrease of 200 million dollars in debt, and there is no debt right now until 2022. So it has senior notes due 2022 with 7.5 interest due at $312 million. That's actually a pretty low number for the amount of quarters going on. And after that, it's a smaller loan until 2024. Their biggest loan, but it has such a low interest rate, is due at 2026, which has $679 million. But we can say just this month, just this quarter alone, they paid about $130 million in that debt, not including the $70 million they paid on the 2024 senior notes. This debt going down is definitely great news, and for that reason, I'm gonna have to give a point to Bull Solo. But not only that, they reduced debt by $206 million in Q3, and right now cash balance is greater than principal debt. This is the first time I've seen this happen. This is the first time that cash balance is higher than the total principal debt. Right now, the company is sitting at a total of $1.2 billion of cash, where the company has a total debt of $1.1 billion, like I mentioned, right? So this is big news. This is for the first time that I've ever seen AMD positive cash balance compared to his principal debt, and you can see why I had to give the point to Bull Solo. Now we're almost at the end of the episode, so I hope you guys have collected a lot of information. Now let's take a look at an outlook based on analysts for the upcoming year. So this is December 2019, December 2020 as a full year, and annual revenue for the same quarter. So for this year, they're expecting annual earnings per share to be 62 cents. That gives this a forward PE ratio of 53. For December 2020, they are seeing an increase of earnings per share to $1.07, and that gives this a forward PE of 30.86. That 30.86 is actually not that scary when you compare to the other technology sectors. Most tech companies, I feel like if we take a look at NVIDIA, which we will once they report earnings, I want to say they're probably around 25 forward PE ratio. And looking at forward PE ratio of 30 is not that bad. Looking at a forward ratio of 53.34, in my opinion, is pretty bad. But we are seeing earnings per share increase dramatically. This company is definitely growing at a rapid pace. We can see annual revenue for this year is expected to be $6.7 billion, and for the next year is expected to be $8.47 billion. So we can see a revenue increase as well, and for that reason, I'm gonna have to give a point to Bull Solo. So now let's take a look at an outlook based on the company. So first, let's take a look at the full year of 2019. They expect revenue to be up mid-single digits percentage-wise year to year. And that, in my opinion, is pretty good, because why do I think that's pretty good? It's up even though they have the lower blockchain demand that they had last year. It's up even though they have lower semi-custom sales because of the video game sector. And they're up because they are increasing their sales on EPYC server and Ryzen processors. So imagine when they have a higher demand of the semi-custom chips, percentage-wise is going to go up a big amount. And I think this is really good for this upcoming year. Now let's take a look at the quarter. For the quarter, they have a total revenue of $2.1 billion plus or minus $50 million. They want operating income to be between $130 million and $170 million. So again, they're going to produce a nice positive earnings per share for the company. So that would be it. Oh, actually, based on the outlook, right, we're seeing an increase in Q4. We're seeing positive income. We're seeing a increase in year-to-year percentage of revenue. So obviously, I'm going to have to give a point to Bull Solo. So that gives me, this is the end of the episode. So what would I value it at? And I have to take a look at their 10Q report. I'm going to do a video on the 10Q report next. But the forward PE ratio right now sitting at 53.34, I think it's pretty high. but seeing the forward PE ratio decrease that much from 53 to 30 in just 1 year shows that this company is a true growing company. So a forward PE ratio for 2020 of 30.86, I don't think is horrible. I think it's a little bit on the high side, but that's because I'm pretty sure they expect December 2021 to be in the mid-20s. I would say, and that to me is definitely good. I mean, I don't think, like I said, I don't think a forward PE ratio for 2020 of 30.86 is horrible, just because I'm pretty sure if we take a look at Nvidia's we know Intel's forward PE ratio, I think it's like 10. It's about 10, but that's because that's a built company. That company has about, I think, $80 billion in revenue, where this company only has 6.7. Look at the difference between the company. This has $6.7 billion in revenue, where Intel has about $80 billion in revenue. So you can see why that company is a more stable company. Definitely Intel is a more already flat on the ground company, and that's what the PE ratio for Intel is about 11, where the forward PE ratio for AMD is about 30.86. But like I said, 30.86 I definitely don't think is a bad number. So I hope you guys enjoyed the episode. Let me know what you think about AMD. Let me know what your plans are for AMD, and let me know why you like or hate AMD. So take care, guys. Have a good night, and see you next time.